Hello, Warriors. Fed Day. Okay, so let's talk about different narratives here. Dollar's trying to recover a little bit. It's not impressive. Metal's smashed. S&P's down 8. So, what happens now until the Fed, to me, is kind of meaningless. So let's give some great analysis for what might be meaningless in a few hours. Not true. So let's look at levels so we're prepared to react after the presser or during the presser. Everyone with me? Good day, Ingmar, Shahab, James Groom. Watch you, Ryan. Nice yen trade, man. Steve Bartholomew, Hugo, Brand, K-Man, how are you? Mike Weissman, Blake, Forex Gal saying hello. Wow. Share chart. Well, give me, be patient. If you can't be patient for my charts to come up, how can you be patient during trading? John, how are you? Ayaz, Brand, Will. Okay, here you go, Forex Gal. All right, well, get an Etch-a-Sketch. I bet no one knows what that is. Anyone know what an Etch-a-Sketch is? So the big feature is metals getting crushed, right? That's a big trying to fight their way back. But I did want to point out, even though I don't think this is the sell point, that we're developing a third drive. If you call this 1 confirmed high, 2, and it wasn't a stop hunt because once they took out 1830, they tried to take it back down, but it just accelerated. So here's drive 2. And here's drive 3 at new highs, and you have a lower reading on the RSI. Looks like people are going to get their 95 level. Grega, unless they turn it here, it would be a surprise. It could happen. Be prepared for anything and everything today. Silver's fighting its way back, but that's a pretty good hit. Gold silver ratio took off today, which it doesn't have to happen right away, but the gold silver ratio bottoming gives me a belief that we're not that far away from a dollar bottom because they are correlated, not every day, but in general. So this is saying that gold is your preferred long, especially if we really get going here. This has been a big break, right? With a monster move in silver, 106 to 86. Why can't we rally just in a bear market fashion back to 96? Okay, so that's what I see happening there. Let's bring in the crew. So let's start off with Ryan. How are you, buddy?
Morning, Squire.
Okay, my prince, Euro USD, a little pullback, but was this an important level that we stopped at, or are you kind of in the 120 cap now?
Yeah, it's a coin toss from here whether we go all the way up or all the way down again or do nothing. I haven't got too much up here. The little bit up here, what do I have? 118, 60s, 70s, but yeah, there's into the figure 119 is going to be important. I think you can discount all your tech levels in probably a 50 to 100 pip range until after the Fed, and then see where prices are and what levels are going to come back in and be relevant. So yeah, it's wait and see mode now. I've cut down the bulk of my dollar positions that I took in the last couple of weeks.
Yeah,
Fortunately, they all worked out. So I've done my Fed trading. I can kick back and relax and manage
nice,
the rest.
nice position. You still holding some short yen because You know, Ryan, I had this line drawn a long time, and you know how you say something for a while, then you get distracted by other markets, and you
Yeah,
forget that this was really your objective was 145. I mean, down here, I'm a buyer of
yeah,
U.S. dollar yen, and I'm thinking the dollar bottoms around the same time.
yeah.
That's what I'm looking for. Uh,
It's possible, but then it could also rip in your face today.
yeah,
If it had moved a bit more, I mean, I was short the top end up 148. You know, that's
yeah, yeah,
160 pips away. For
right,
me, that's not enough margin with the volatility in this pair.
right,
So, you
yeah,
know, if I'm short from 150, then I'd say, yeah, I've closed off a bit. I'll leave a bit on, see what happens. But no,
yeah.
I've closed all that off. The only dollars I've still got on is a little bit of cable and my long-standing dollar mix and a little bit that I put on this week. But yeah, you know, and you know, if you want 145, Dale, you might get a rally first
Yeah.
off, and then you position yourself better for that move to 145 in dollar yen.
Okay. Um, Commodity currencies, Aussie is kind of really didn't participate that much yesterday. Uh, yeah, is
Yeah,
67 big? And you know, it is holding up pretty good considering what's happening to metals right here.
yeah,
So,
it's got a proper hard on Aussie dollar.
yeah, yeah,
Yeah, I've got a level just here ahead of 67. You can call it 67.
yeah.
You've got to go way back to November last year when we last tested this area after the breakdown.
Hmm.
So it is a big level historically. Will it break? Will it hold? That's the question. I think Aussie dollar or this pair might be one of the pairs, the candidates for, you know, if we do see some dollar strength today, might be one of the candidates that doesn't dip back too far. And you know, with gold still flying, it's got every chance of recovering.
All right. So with gold doing everything it did, platinum, and it was a great move, did not make a new high. And to me, it looks like we're going to have something like this from here. You know, I
Yeah,
could draw a line. Maybe it's going to develop into some type of big bull flag or something. You know, see something like this. That's where I'd be buying platinum down
yeah,
a little bit under 1200. So be patient for these white metals, palladium as well. And I would even be cautious in Bitcoin, even though it had a great day yesterday. I'm still not convinced that we're not going to have one more decline. This is, you know, if I was long Bitcoin and not S&Ps, I'd be disappointed I wasn't long S&Ps. So I mean, as a risk proxy, I'm not impressed. And if you want to stop loss, because you're a holder, you don't want to see it initially under 115 is a problem. But back under these highs, this 113 level, I'll put some kind of vertical there. Um, I wouldn't be long anymore. So, uh, you know, I don't know how many crypto Bitcoin people we have in here, but there's your bull bear line in Bitcoin, the way I see it.
yeah.
So let's talk to K-Man. K-Man, how you prepping yourself for today? Are you lightening up,
Yeah,
ready to react to the reaction rather
uh,
than hope it
yeah,
goes your way?
yeah. I reduced a lot. Had cable that's gone. Had what else did I have? Yeah. Oh, yeah. I was short dollar Noki. I legged that into Euro Noki. I've let yeah, like nearly three-quarters of the Aussie go. That one I'm keeping a little bit. Silver I lightened up as well yesterday. Wow, I don't have too much running anymore. Yeah, I took took half, even more than half of my dollar mix off as well. So, but that one I'm keeping for as long as we are below 1850. Yeah, so I'm going pretty relaxed into the FOMC and see what Powell and friends have to tell us. Um, Pretty big setback indeed in silver, but we have seen that in the past when when demand all of a sudden dries up, we have seen those kind of moves in the past as well. I think the global picture, it's going to be interesting for the short term at least. It's going to be interesting today. 41.50.60. We also have a little bit of a support line from early September coming in just a little below here, 41 and a quarter or so, which we actually tagged again, I think, this morning. So it's going to be interesting there. But again, we have seen this in the past. Gold also correcting, but less so. I think gold compared to the rest of the metals is still much more traded.
Stable.
It's a deeper
Stable.
market.
Yeah.
And all the non-monetary policy reasons to be long gold are still in place. So it's probably less volatile and perhaps better supported as well. I don't rule out a setback even down to 3600 or so, to perhaps start to get long again, or around 3550 or so. But yeah, this all the other reasons, barring potentially the dollar over the FOMC, are still valid for it to remain supported. And for the rest, what am I thinking? Well, for once, I'm looking at
Does
euro.
this mean anything to you before we leave the metals?
Well, usually it doesn't, but it coincided with a correction in, well, a small correction in the dollar. You can compare it a bit with cable and the euro dollar, the one going much faster than the other. I think it has to do a lot with the size of the market. Silver is a much smaller market, and all of a sudden the demand dried up, and there were just no buyers anymore, and people left probably with long positions in silver, and that's your big spike. I know what you're saying about the dollar side of things.
But I'm really not. I'm saying that this could be an important signal that silver is going to be the weak
Poor
sister
child,
for a
yeah,
while. For a while,
be- could be
yeah,
because it's been the outperformer for a while as well.
yeah, all through
But
this.
yeah, I think if it's an indication for the dollar, we will see how this behaves after once the
Okay,
FOMC is done.
okay.
And for the rest, I was saying about the euro, yeah. What is struck me over the past two sessions, let's say, is that the euro is doing better on the
Yeah.
crosser side of things as well. So I'm bringing it back onto my radar for one of those pairs that could actually accelerate the fastest if we have a very, very dovish FOMC. We've been talking about all the possible variations on the flow show, and there are quite a few, and we haven't even spoken about the end of QT, etc. Um, but euro is back on my radar because it's been doing all right on the crosses over the past couple of days.
Okay, nat gas getting ready to challenge the highs of wave one after a
Mm,
61.8% correction.
yeah.
I think on its way to challenge the downtrend. That's up here. It's about 330. So we'll see. USO had a good day yesterday, which is the same as oil, down a little bit. It's really held to 72 like a rock, and
Holding, huh?
I pointed out 72 last week with the
It's
moving
holding.
average.
It's
Yeah,
holding
and
quite well, huh?
yeah, it's long oil.
Crude broke out of the wedge and then
That's
it came and retested the wedge today, this morning, and bounced about
yeah.
50 cents thus far.
I
Okay.
Yeah, could be an indication, that and not only WTI but Brent as well as
Yeah.
seemingly found a bit of a bottom. And
Can you
yeah,
spell Iran? Can you spell Russia and Iran?
can I
That's
spell
probably
Russia and
the
Iran?
Yeah, that maybe they're starting to price in some more geo risk in the Middle
Mm,
East.
yeah,
And I didn't see a peace treaty. Did
the
you?
the problem no, but the problem is since the start of this Russia-Ukraine thing, all the rallies that we have seen in oil or energy have been sold into because of the lack of demand elsewhere. But it just seems that we may have ran our course to the downside for a bit. That's what I'm really saying. And it would be interesting actually if we found support here and not going to get back to levels around 55, anywhere between 55 and 60 on WTI. It would be interesting. That the demand would come back a little bit and we get a bit of a move higher, and that's probably going to pull the one that you're showing there up to above 80 again. Yeah.
Measures 100.
Oh,
So
all right.
yes,
Okay.
so this was, I don't know, $24,
Mm,
78 breakout gives you 102.
okay. Yeah.
Yeah. Ukraine bombed a major Russian refinery. Okay,
Mm.
thanks,
Yeah,
George.
that true. That's true. Yeah.
Yeah, so there's all, and plus, don't forget we have this big increase in electricity demand with these huge AI centers.
Mm,
They make the demand. People used to complain about crypto miners and their utility demand, and that's just a speck of dust
mm,
compared to what these AI centers are going to
yeah.
need to run it. So,
Yeah.
all right, well, let's get to the boss. So Blake, first of all, I know you're going away, and we know what happens, when you take a few days off, that we'll have some major volatility Thursday
Yeah,
and Friday, right?
that could be the risk. That could be the
Yeah.
risk. And it's yeah. This is a planned departure to visit my son in college,
Wow.
and yeah.
What game?
So
Are they playing at home?
yeah, they're playing. It's Tulane Ole Miss, so it should be a really good
Ah,
football
you
game.
you
Yeah,
lucky dog. All right.
I know my first
Good
SEC
trip.
game. It'll be great.
Because they
Um,
were on last week.
was
So
that?
I saw them play on TV last week, Ole Miss.
Yeah,
They look good.
they're having a good they're having a good season. Yeah, so today's as these guys have been talking or you guys have been talking about, it's going to be a big one. One of the obviously what we're looking at right now is where's it's not the Fed cutting 25 basis points. It's going to be what interest rates are pricing following today. Because if you you look out at the next 3 months, we're looking at a 70% chance of or 70% of or 70 basis points of cuts over the course of the next 3 months. How's that number going to change after today? So are we going to be more dovish? Are we going to be more hawkish, or is the Fed going to be more dovish or more hawkish? And the dollar is literally sitting on really critical support. It's interesting, Dale. Earlier this year, at the end of last year, we talked about the dollar index getting down to this rising trend line. This is the
Mhm.
one that we have discussed on multiple occasions, and here we are. I mean, this is truly a make or break it level for the dollar. Everybody's like, oh, this meeting's not going to be that big of a deal. Or there's some people that are like it's not gonna be too big of a deal because we already know what the Fed's going to do. But the market implications, especially for the dollar, could be quite dramatic today. And it doesn't necessarily mean today, like over the next few hours, but over the course of the next week, this is going to be really pivotal, because if the dollar breaks down because the Fed is it just comes out in a little bit more dovish, the dollar really could pick up some steam into the end of the year to the downside, taking the euro towards 120 and beyond. The flip side of that is if the Fed chair Powell, he despite all the pressures that he's feeling, if we walk away thinking, yeah, I don't know if, I mean, we might get one more cut this year, but I don't know if we're going to get another two, going into December, as the Fed wants to be more data dependent because they're not completely sold on the idea that inflation pressures are going to be completely transitory. We could see a really big dollar bounce. And I have to constantly remind myself that the market is pretty well positioned, short dollars at this point. And the market is also very, very strongly and and heavily long gold. So those are the two positions today that I think, and obviously equities as well. I mean, some people will say that well, there's a lot of money on the sidelines, but there's always money on the sidelines. There's always money on the sidelines because we have passive flows constantly trading, running through this market. So I think that gold and the dollar could be very, very instrumental and key to how we position ourselves, following the Fed. And so it's for me, it's pretty easy. I mean, the dollar index, all we really have to focus on are the trend lows here, and what happens at the trend lows, which is right here. And let me just draw it out for you guys to make it real simple. You guys can figure out which currencies you think are going to be the best based on what happens here. But this zone is the zone that we're in. You can see these lows back here from June. We break those lows, and we sustain a break. And a lot of these moves that we see today could probe. What I'm looking for is, where's the dollar going to close today? Because if we close back below this 96 level, that's really going to open up the downside. Like in the past and over the course of the last few weeks, I'm like, I'd like to short the euro at 120. But if the dollar index closes in the lower here, I'm not sure if I really want to do that trade. I mean, I've been wanting to, but I'm not sure I'm going to stick myself out there with the dollar index breaking a 14-year trend line. The
Hey,
flip
Blake,
side, yeah,
if you draw a line under the March low, uh,
which will be right here.
uh,
Oh wait,
oh,
this right here, this
no, you could go back
right
to,
here.
yeah, no,
Okay.
all right, well, I can't see it. Anyway, it's a line that Greg has. There you go. Those two lows, the lows we had there. Okay. That's the ending diagonal if it gets down there.
Okay, well,
And the
that's
third drive. That's
that
94-ish.
from 97 basically to 94.
Yeah,
That's
it's
a
a
big
big
move.
move.
That puts the euro at 122 to 123. Like I said,
Yeah,
I don't think I don't think I want to stand in front of the euro if the
yeah.
euro is in breakout territory. And the flip side to that is, you go back over to you go back to the dollar index and you look at you go look at resistance here. We get back above 97 30 40, and we're going to squeeze because that's telling us that, hey, we're back above the breakdown point, and that's probably a result of a more hawkish Fed, and everybody seems to believe that we have, because we have Bowman, the Kevin, Moran, that the rest of the Fed, the rest of the FOMC members are just going to fall in line, including Fed Chair Powell, and really signal that we're gonna get 50 basis point cut maybe in the next meeting, and maybe another 25. We might get 75 basis points still by the end of the year. And I think the market is feeling that way at this moment. And I don't know if we're necessarily going to get it, but it's all about where the market's pricing, going into the end of the year. And one thing I'm gonna go back and talk to Ryan and K-Man and get some comments here, and from Steve. I know Steve is here as well. One of the other things that I wanted to say is accentuate or reiterate what Ryan and K-Man were talking about on the Flow Show today. If you guys weren't listening, I pulled off all my dollar trades last night. I'm done. No more dollars. I'm going to react. Now I did trade a little bit this morning, but I'm talking about any long-standing positions that I had in the dollar. Not going to have them. Not going into today. I want to react to what is happening. I want a clear head. And one of the things that Ryan said that really hit home, and it should hit home with every trader out there: you can make a lot of money today, but you can lose a lot of money today. Today is not a day that you go out and swinging for the fences. This is going to be a day that's going to provide a lot of volatility, more than likely. But if you've been in a losing streak, this is not the time to swing for the fences, because you could really put yourself in a bad situation if you get caught on the wrong side of the market today. So I just wanted to make sure that I said that in brief, because you guys should probably go back and listen to the recording of what Ryan and K-Man talked a little bit earlier. Ryan, let's talk real quick, and any final thoughts here in the last few minutes before we have this Fed meeting today.
Final thoughts. If anyone wants to monitor what the dollar's doing, well, you know me, I won't. The last thing I look at is a Dixie. Is keep an eye on 10-year yield chart. That will be your guide for how far a dollar move might go. There's some nice clear levels in there that we've touched before: 450, 420, 4%, 370, 380. There's some good margin in there to see, how far moves will go. If yields hit those levels, it can put the brakes on any move.
Great point. K-Man, we just have a couple of minutes. Any last minute thoughts here?
No, as I said, reaction function as well. But I do think if they are, let's say, middle of the road, but not giving everything to the market, but still leaving the doors open, and the market needs to correct the dollars. I am of the view that unless they are really more hawkish than or the real hawk surprise, I can see the reaction in the dollar being not lasting as long to the upside than it would be to the downside. I think if it gives the market what it wants, so really sounding dovish, the reaction will be bigger than to the other side. That's
All
my-
right. Yeah. And
that has exactly been my position, Blake. I've been saying for quite some time, I agree with how Cayman put it, that the risks to the downside for the dollar are a lot bigger. There have been for quite some time than the opposite, than the potential of a big move to the upside. I see very, very little potential for a big move to the upside, but I see a very obvious potential for a move to the downside.
You have targets in mind, Steve? For downside targets in the dollar?
If we're talking
Give
about
us
the DXY specifically, first of all, the DXY is currently testing a major trend line support that dates back to 2011.
So 80.
And once we clear that, I never like to focus so much in very, very far away targets, right? Let's take it one step at a time. I think the next zone of interest, once we slip through this, is roughly at 94.5. So that's the next downside target. But yes, there is a potential for a lot more downside than that.
Yes. Okay,
and Steve, thanks for chiming in, because I was actually going to just come to you next. One of the things I want everybody to be thinking about, like I'm looking for a reversal in the equity markets today, especially if the Fed just is not going to give the doves what they expect.
What they want.
Yeah, right. And that's gonna let some air out of the market here. But let's not forget that we're also embarking on a really, probably longer term interest rate cut campaign. I mean, what are markets, what are banks pricing in right now, Ryan, looking into next year, into 2026, and you're talking about what, going into wrapping up Powell's tenure. I mean, we're looking at 150 basis points of cuts, roughly around there. So, I mean, that's a thing about this market, is we're sitting at all-time highs in equities, and the Fed is going to be, the Fed is actually cutting rates into this situation. Now, one of the things about rate cuts that economists have made and some comments have been that if they're cutting rates, they're usually cutting rates for a reason. Yes, our labor market is starting to weaken. That could lead to stock market weakness, but also, I mean, if the Fed's going to be cutting, like, let's say realistically, 150 basis points over the course of the next, year, that's a tailwind for the markets as well. So I don't know how much downside we have from current levels. But that's something that I just want everybody to think about as we navigate through today. I know that some data just came out. It's very, very minor data, but we do have the Bank of Canada in about 1 hour and 15 minutes. So just keep that in mind for those of you that are trading around, especially if you're trading around some of the Canadian dollars. One other thing I want to leave you with is Ryan's going to be filming this week's week ahead video for you guys. So don't forget that, we're going to be wrapping up our sale, our summer sale. Because again, I mentioned this earlier this week. We finally have some traders that have been off all summer that are back in our chat room. They just got back this last week. So we left the sale open for, all the Europeans and, North American traders or, global traders that were, off for the summer that are back. We're going to be taking that down. So if you want to lock in your price, be grandfathered in, 40% off. I mean, you won't see that for a while. So take advantage of that pricing. And one of the other things that I wanted to mention is I am going to be live today on the trading battle. I will be in the chat room, but we don't usually do a live broadcast, but I'll be doing a trading battle for 8-cap. So I will be on that later today. You can follow me on social media to see where I'm at for that. Ryan came in, Dale and Steve, really great to get your comments this morning ahead of the Fed. I hope you guys trade safely. Remember, it's going to be a lot of volatility. Don't put yourself in a lot of risk today.
Okay. So Bob just arrived, and I want to thank Dream Team as well for
Cheers, everyone.
doing a great job this week. And
You too, mate.
it would pay to be in the chat room around the press conference.
Hell yeah.
Probably at least a half a year of your prescription. Not
Hell yeah.
prescription.
This is going to be the best
Subscription.
coverage of who's ordered what McDonald's at the Fed meeting. It's going to be the best coverage ever. Ryan, that's a funny picture, by the way, that you posted.
Did you find out about the gold salt? I said it was just at McDonald's that you
No.
could get. Okay,
No.
I'm just saying that. Look at what happened to gold the day after I saw that commercial. Anyway, it's like the cover of Barron's or something. And I remember one McDonald's commercial was at a major low in the dollar. The theme was the dollar's low, and they would give you, a low price on your food. So anyway, follow McDonald's for contrarian contrarian trades.
There you go.
Don't eat there. Don't eat there. No, you could eat there. The president does, so it must be okay. I like it. Anyway, I love junk food. Anyway, I try and avoid it, but you know what you can't avoid today? If you're a metalhead, some real two-sided action in the gold and silver, and I have a great guy to talk to about it because Bob Coleman was writing about this squeeze and about lease rates going up and SLV not having the shares to borrow. So a lot of this was market positioning and just not enough physical to back up the paper that drove this. So Bob, good job you did for people in FinTwit of um, keeping them informed. You were one of the first to talk about lease rates going up. Nice
Sure.
work.
I appreciate it. Thank you for having me on, Dale.
Yeah, it's good to talk to you. When you showed up like a minute late, I'm thinking to myself, oh my God, with a day like this, I'm sure Bob's just busy that the phones are ringing. Are you busy today with what's going on?
Not too much this morning. I mean, it's 6:30 right now, Mountain Time, so
Yeah,
I think
yeah,
most people are still sleeping, but no, I think the activity um won't really kind of happen till what
yeah.
two
Fed,
o'clock. Yeah.
yeah. If you have any charts to share, I've seen your tweets. You put out a lot of good stuff. I don't have to share mine if you have some things you want to show. Otherwise, I'll show mine.
Yeah.
What was behind the sell-off last night? What are you hearing?
It could just be profit taking, honestly. I
Yeah,
mean, we've been up pretty strong. If you look at the mining stocks, these things are, I think, overextended. I think if you look at GDX on a weekly chart, this is, it was going 4 weeks above the upper Bollinger Band line.
yeah,
Um,
parabolic.
yeah, that's, typically you may go 5 times, 5 periods above a Bollinger Band line, but whether it's daily or weekly, but that, it gets stretched at that point. So,
Yeah.
that's something I kind of watch for. So,
And look how far above it. This is a weekly though, so let's look at it daily.
mm.
Yeah, I mean, that's pretty far above the 50-day and really far above the 200-day. So, um, yeah, just pull back in a bull market, right?
Yeah, and I mean it's interesting because if on the fundamental side, I was talking to Steve Sanangelo of SRS Rocco, and he does a great job on profit margins, cost of production, so forth on gold and silver miners. And he was recognizing in 2011, I think we hit about 63% profit margin on gold, and that kind of marked the top, or when it hit the top, I should say. And we just hit that again in terms of profit margins. Uh, so that's, you try to look for similarities, but I think what most people have to understand with mining stocks is, this has been sort of a almost a uh, perfect moment for them because oil prices were low,
Yeah,
input costs were low, but
yeah,
if oil starts to rise, and that starts hitting their input costs, even if gold goes higher, that profit margin is going to decline, and some of these stocks are priced for perfection right now.
yeah. They're talking about that. There's big stories now, Bob, that we have another farm crisis. In fact, they're doing a concert like they did in the mid '80s when a lot of family farms were on the verge of bankruptcy. And I'm seeing all kinds of features, and the main thing is not just markets being taken away by tariffs like China only buying beans in Brazil, but their main complaint and why they want an emergency cash infusion, which we all need once in a while, right?
Mm.
Is because of input costs, fertilizer costs, energy prices. Energy goes into that input cost. So, yeah, you're talking about oil. It's very possible. The whole world's been bearish on oil. This does not look that bearish to me. If we get above 78, we could be looking at $100 oil. So if that happens, it probably would be better to be just long the physical rather than the miners.
That's always been my sort of perspective. I mean, it's, if you go back to 2010 or 8 or 9 or whatever, and you look at the mining stocks, they're only getting back to where that high was, which has been very frustrating, I think, for a lot of people.
Oh
This
yeah,
obviously this last year has been, year and a half or so, has been just,
yeah,
an incredible run. But again, people have to look at mining stocks as more, I think, more of a trade than a long-term investment. Unless it's, there are some sticklers out there that have had some great performance, but overall, especially like a lot of these penny stocks that start
oh
going from
yeah,
50 cents to $2. I mean, it's, you're getting the froth right now. So
yeah. So here's what Bob is talking about. Long term, we're back to the 2022 highs, but let's take
yeah,
a telescopic view and
you could
yeah,
even go back to the 1990s on Newmont. You'd be surprised where the price has gone.
okay, yeah,
If
what
you
a
can do an
move.
all chart, I don't know if you can do it all. Oh,
There's the 80s.
Yeah.
So that's, I mean, this is near, you know, well, really, this was the top of the first gold bull market. 880 was a high. That was the invasion of Afghanistan by the Russians. And then I don't know what this was. This was what, after the 87 crash?
Yeah.
Let's do a history lesson. Okay. So what was happening? The dollar, was this before the Plaza Accord or the Plaza Accord that took the dollar down at
Yeah.
this time? Okay. Then we had the great financial crisis. That was a pretty good rally, right?
Yeah.
And then this one back here was what, in 22? What was
Yeah, you
going
had
on?
after COVID, you had this sort of squeeze higher in a run in some of the mining stocks and also in the metals, but the mining stocks kind of took off, but there was kind of a premature type of rally because the margins were everything just got expanded, and then you had uh, uh, the Fed tightening or raising rates. That was
Yeah.
right before they started raising rates, or actually,
Okay. Do you think dollar's under pressure too, last couple days? It doesn't seem to have helped gold, this late stage dollar weakness. Do you think this time, I was listening to Martin Armstrong, and this is what he's saying. The market, gold, and the dollar, which isn't right now, but he's basically saying going up with the other two, is that there's a movement of cash, funds coming out of Europe. They want out of Europe. He's worried. He's not worried, but he thinks Europe is on the verge of huge problems. I don't know if it's because of the war or what's happening fiscally. I think he's always been kind of a critic of having a monetary union without a federal union. And, some of the things happening in individual countries. He's very bearish, Europe. Uh, do you think if the dollar started to rally this time, that the old time correlation of a strong dollar would have a negative impact on precious metal prices?
it could. I mean, we're definitely way above moving averages, that type of thing. I mean, this has been momentum and
Yeah,
price chasing big time in the metals, and but this is how these commodity markets work. I mean, they go sideways and all of a sudden they launch. Shorts get trapped. They start covering. Producers that may have hedged get squeezed. These are all part of the ebbs and flows. It's sometimes it's a dollar story. Sometimes it's not a dollar story.
yeah.
It's almost like the Almond Joy commercial.
Okay.
But I think what we have ultimately, the way I kind of see it is, if you're looking, for example, at silver, some of these price targets will act as a magnet, and I think that $50 level, I think people are watching, and it's just,
Yeah,
I think it's natural that you test that again at some point. But typically, what really runs the markets I've seen in the past is when people are off sides or on the wrong side on the futures markets or derivatives, and they're short, and then they're forced to cover it. I think this is what
right.
we started to see in this run here. You did have some physical
And
buying pick up.
and may I say, you diagnosed that early. It was the gold lease rates that started going up first before the silver, right?
Yeah, you had, well, yeah, you kind of had, yeah, you're right. It was gold initially, and then silver and platinum kind of followed. Like this morning, if you look at SLV borrowing from Interactive Brokers, there's no shares available to borrow.
Okay.
That may change obviously in an hour or so, but tells you how tight things are, and you're not seeing. So what that basically means when I see this kind of stuff is at some point, authorized participants are going to either have to deliver deliver silver to the SLV and create shares, or they're going to have to uh, or people are going to have to obviously sell, and market makers buy those shares in the open market.
Yeah.
But the idea behind it is if and some of this is also option related, because options have taken on almost a whole new meaning to this market, to all the markets. I mean, it's
Yeah,
become
they have.
enormous, and that's having an impact. So you have, dealer hedging, and you have, the gamma situation. And so if the prices start going in a one-way direction against potentially a dealer positioning, they have to then start hedging even more, which, if they're people are buying calls and dealers are selling calls, and then they go long the stock, they have to go that long even more stock as the price goes higher, because the probability of those calls, going into the money, and potentially being converted into actual shares becomes more real. But this is the market. I mean, that's why the manipulation theory that a lot of these retail dealers try to espouse on the retail public is, I think, very misleading and disingenuous, because the markets are just, they're enormous. I mean, there's a lot of input factors that go into the pricing of gold, or just a stock in general.
I don't put horizontal lines in for no reason. So this 35, 34 level, if you go all the way back, you see how it was pivotal here back in 2010, 2012. I think that would be a great entry if offered around 35, 34 bucks, which seems pretty far away. And it'll be amazing how bearish people will get on that break when all it is what, a $6 pullback after a $28 rally.
Yeah.
Um, so the people are talking about 75. Are you in that camp? And a hundred
Um, I,
dollars?
at some point down the road, I think the way I kind of look at this initially is we get this run up to, the gold silver ratio,
Hmm.
pulls back into a new range down toward, like I think we were talking about earlier this year, you were looking like 50 or so.
Yeah.
Um, I think you could see some sort of surge with the metals that corresponds to potentially a top in basically everything, because what you're seeing in the markets is, President Trump is essentially deregulating the financial markets in a way, and also a lot of other policies. So it's basically very similar to Bill Clinton and what they did with deregulation, with between investment banks and commercial banks, that led to this ultimate bubble into the real estate market in 2006. But it opens up the doors and allows prices just to surge. But at the same time, these rules and regulations were put in place because of prior malfeasance. And as humans, I guess maybe we have a short attention span, but things tend to repeat after a while.
Yeah.
And I think my worry is that we just have this melt up scenario, and then you get some kind of big pullback, and from that pullback, then I think just to service the debts of the U.S. Treasury and so forth, then I think then you get some serious money printing. That would be my guess. But
Okay.
obviously we had the Fed meeting today. That's people are looking for 50 basis points. They're looking for dovish talk. I mean, there's multiple things that they're looking at the same time.
Yeah, this gold silver ratio looks pretty constructive to me right now, as long as we hold 86. In fact, we've had over $20 decline, right?
Mhm.
So even if it rallied back to 96 or so, that's how you could get, weaker silver prices compared to gold and maybe get down to those levels. Because everyone, look, up here, it was a great trade. It could be again, but being short the gold silver ratio, I would wait for some type of fib correction. It looks like 86 wants a hold for a little while. So I wouldn't be short gold silver ratio right here. And at times it's a precursor for a dollar rally. So it's just my view, Bob.
Sure.
What do I know?
You know a lot.
Anyway, Are you real busy now? Or are the retail liquidating into this rally or?
Yeah, the retail has been selling all the way up. After Labor Day, I think the industry started to see a percolating of new buying coming into the market. I think prices have been going up. People have been on the couch. They go, okay, well, the prices are rising. I just got to get in. So, and prices will do that. I mean, it's you've been in the business a long time, and
Yeah.
it forces people to kind of chase a little bit, and they don't want to miss the move, so they eventually get in. But I think also you just have, I think people that made a lot of money in the stock market, they continue to see, the geopolitics, all the problems of the world, the frustrations with trade policy and so forth, and they're like, maybe it's just time for me to take a little bit more chips off the table. You got, more and more bigger names being more outspoken in the precious metals, that typically are not sort of gold bugs, like a Ray Dalio or someone like that comes in that
Yeah.
people look at more of a mainstream investor versus
Yeah.
that gold bug mentality. But I think that kind of helps. But you just had a lot of capital flows coming into the sector. I mean, mining stocks going up, that attracts a lot of money. So but you're right. I mean, you do get pullbacks from time to time. The question is that a lot of people look for is, hey, is this pullback the end of the story? Is it just a simple refresher? And that's the kind of stuff that I try to look for, on a day-to-day basis.
Well, I'm reading that Peter Schiff is bullish gold. Isn't that breaking news? Huh? What? I thought that was breaking news. Anyway, Peter and I know some guys that have had the best year of their career that got in early, bought shares, bought metals. They've been looking for this to happen like it's the end game for a while, and really has enriched a lot of people, kind of like Bitcoin did. Maybe not to the same extent, but here's Bob's company. And I personally, the best trade I made, well, I've had some decent scalps, but the my longest hold is what I bought from you. And I have it because I can't click a mouse to
Right.
get out of it. And now I finally understand the advantage of buying silver, because if you want to sell it, you get a hernia on your way to the dealer carrying it with you. So you end up just keeping it. Anyway, Bob, so Bob was very efficient with me, and got the medals, sent the money. And a lot of people worry about getting robbed. There is a lot of that going on. He has an option for you. You want to talk about your vaults and how people can feel secure about leaving their precious metals with you in Idaho.
Yeah, we now store $1 billion of metals. We have $1 billion all risk insurance policy through Lloyd's of London, so we've never had a loss at the facility. Something we're very proud of. Our motto is to really try to support the customer in their efforts, rather than the typical dealer, which currently right now a lot of these big name dealers are paying 10% under spot in certain products. 1 ounce rounds, 100-ounce silver bars, junk coin. And so the dealer mentality is much different than, say, the broker dealer mentality, where you have a lot more rules, regulations, compliance, and you have to work on a best efforts basis for your client. In the dealer world, it's all about your business model and how do you protect your business model, and the business model may conflict with the client's best interests. And that's what I try to educate people on, is the differences between the two, because what I'm seeing in the industry right now is a lot of dealers that set up depositories have basically entrapped their customers into the pricing of what that dealer is willing to pay or when the client goes
Right.
to sell back that metal. And it's
I
unfortunate
see.
because I see a lot of
Yeah.
frustration out there. I get a lot of phone calls from people that have been marketed by these big dealers. And then you also have a lot of these big California dealers that out of Beverly Hills, for example, that sold extremely highly marked up products. They're realizing the how much money they've lost by the huge markup, 60% markups
Oh
for
my
half ounce
God.
gold coins. It's been brutal. The only thing that saved this industry, I think, is the price rising. Otherwise, if the price goes back down, you could have a lot of unhappy people out there.
You're going to have major lawsuits
Yes,
about,
yes,
and that'll happen if and when the prices do come down. Because if people are losing money after this kind of advance, it always takes just a few to ruin it for everybody. But Bob, in a way, it's your edge because no one's saying that about you. And
sure.
so and the way you try and educate people so they don't get ripped off, I think is a service, whether they buy from you or not. You're out there on X educating people so that they aren't pigeons when they walk in or fly in and buy PMs.
Yeah, or when they're selling back. I mean,
Yeah.
what's been saving the dealer world this last year and a half has been 2020 to 23 was people paying extraordinary premiums to buy the product. Now they're getting extraordinary discounts when they sell it back. And that's what's been the saving grace of the industry, which, yeah, again, I get the idea the dealer has to make money. I'm totally supportive of that. The question is, your advertising and marketing says one thing, your actions say another. And the problem is this is an unregulated industry and you can say whatever you want. And that's the frustration. I'm uncovering, like, for example, the Better Business Bureau is really a sham in a way because when they look at accreditation, this A+ accreditation that a lot of dealers will flock to and say this is we're A+ accredited. What you need to do is remove the word accreditation and put the word membership in there because you're paying the Better Business Bureau to be
Yeah.
listed in
Right.
there, and I think that's going to be one of the biggest. Unfortunate, one of the potentially the biggest scams, in my opinion, because there's a lot of dealers that, for example, have vastly overcharged people. They have A+ ratings, and if you look within, from what I'm told, the Better Business Bureau rating system, if you have 100 complaints, for example, as long as you're the business and you reply back to those complaints saying, hey, listen, I'll look into this matter for you, the Better Business Bureau will maintain your A+ rating. Even if you have 1,000 complaints, it doesn't matter. And I think it provides a big false sense of security for a lot of people that may look
Yeah.
at these types of reviews. So these are things that I'm going to try and uncover a little bit more. It's hopefully it helps somebody out there that avoids taking a big loss or buying something that's vastly overpriced.
Write a book, bro. Write a book.
Yeah.
I know it takes a lot of discipline to do it. Mandy's commenting, did you see the long lines in Sydney at the bullion shop? Mandy, I was taught when there are lines for people to buy something, sell it to them. Okay. So people are thanking you, Bob, and
Yeah.
what was I going to ask you to wrap the show? Go ahead. You had something to say.
Yeah, I think along those lines of lines at the local dealer, you're still seeing people selling back. You still
Okay.
see this disenchantment, or you may be seeing people saying, "Hey, listen, the price is where it was when I bought it, 15 years ago. I'm taking my money out now. Finally, I'm breaking even. This has been the worst trade of my life." I mean, you get a
And
lot
then
of
they're
different
going
stuff.
yeah, and then they're going to pile into bubble-licious stocks with that,
Yes,
because
yeah,
right?
that's how it normally works. And this is where it gets interesting because you look at positioning, in the futures markets and so forth, and like for example, on platinum, managed money started to ramp up their shorting of platinum again last week. So you have this almost this uh, you look at the markets and you look at macro investing and so forth, and a lot of these guys will look at the macroeconomic environment and say, okay, this is where we're at. Dollar could rally from here. The playbook says short gold, and they just been run over. And partly that's sometimes that'll fuel the fire. Is the short interest, especially in the futures markets, and the 2011 and 1980 highs in silver were partly due because of the futures markets and forced
Shorts.
selling or forced buying of the shorts.
Yeah. Yeah. So I remember the Hunts brothers. Manny made a comment about an article you wrote about 1933. Does it have to do with the possibility of confiscation of gold?
Yeah, there's a lot of misconception on the 1933 Bank Holiday Act, whatever you call it, the executive order. Um, Even though they asked for the metal to be turned in, 70% of the metal was actually turned in before the executive order even went into effect. We were back then on a gold standard. The idea was to try to increase the money supply,
Right.
and the only way to do it at the time was you got to bring more gold into the coffers, and then they obviously adjusted the price, but only one person ever had their gold actually went to jail or was fined. And that was just a lawyer out of New York City that wanted to test it. Otherwise, nobody was ever fined or went to jail. And there was a lot of gold that wasn't turned in. In fact, I think after the executive order, I think only about 10 or 15% of the gold actually was turned in. And you were still allowed to own certain gold coins
Yeah.
and
Yeah.
gold
Legal
ounces even.
tender if they
Yeah.
were eagles. That's why people buy eagles.
Yeah, and but the problem with that is the dealer world has taken that and turned it into an advertising or marketing campaign over the last
Okay.
20 years. And then
Yeah.
they hit these coins with massive premiums. And so people get kind of caught up in this idea we're going to go right back to the 1933 executive order. Well, no, I mean the times are much different. You don't have a gold standard anymore. There's no need to put any type of nationalization on gold because it's not we're not backing anything with it. And so looking at this, that's why the bullion coins make a lot more sense. You're just trying to mimic the price of the metals and use that as a way to protect your purchasing power.
All right. I think AI should create a photo of you for your website where how you have when you're lifting weights, you have the bar and you have the weights on each side, say you're doing curls or something. And instead of having weights on the side, you show a picture with silver coin bags being tied on each side, and you're doing a curl with silver coin bags. What do you think?
Sure. Yeah.
I mean,
Yeah.
people would love that, don't you think?
Yeah, definitely. It
All
could
right.
oil the
All
skin
right.
down and yeah.
Anyway, and here's the tagline: "Let us do the heavy lifting."
Sure. Yeah.
All right.
Uh,
Anyway, I'm just put on my marketing hat for a little while. Anyway, Bob, I hope you're having a great year with the price, and always have a great time talking to you and learn from you every time we do it. Thank you for being part of our community family here on Face. We
sure.
appreciate you. All
Oh,
right,
my
buddy.
pleasure. Yeah, thank you.
No, go ahead. You have something else
No,
to
no,
say?
my pleasure. You've done a great job of educating people as well, especially on the trading side. It's a very difficult and taxing sort of uh,
Tell me about it.
job, I guess.
Yeah.
To sit there and very few people actually do it for a very, very, very long period of time, and you're definitely one of the standards, the gold standard in the trading industry.
Yeah, at least for with longevity, huh?
Hmm.
All right. Well, anyway, thanks, Bob. You know, we'll talk in December.
Yeah,
I think we'll be looking at a completely different world by then. But yeah. All right. Thank you, Mandy. And that's going to be a wrap. Follow Bob on X. Okay. at Profits Plus ID, which stands for Idaho. Check out his website. You could sell or buy with Bob and get straight prices. And with that, remember, don't just count your coins, your bars, whatever it is, your ingots, count your blessings. See everyone tomorrow. Good luck on the Fed, everyone. Good luck on the Fed. And I'll see you tomorrow. Thanks again, Bob. See you,
Thank you.
buddy.
Okay.
Adios. You're welcome. Welcome, Golda, Laura.